ahead of its time. African lion may not exist anymore, but halfway around the globe, discerning aficionados can buy Kenyan Arabica coffee produced on a single estate or by women. They can see pictures of individual farmers. Now that is called connecting. However, when I go to a lawyer's office in Lagos or an office in Cape Town, I'm being served Nespresso. I actually travel with Spring Valley or Java House or Dorman's coffee or Safari tea, and people's eyes light up when they actually taste it, but they can't buy it in country. What about more complex B2B goods, such as machinery and medical equipment that use technology in their design, production, and monitoring? Traditionally, Africa has imported many of these products from outside, but did you know that a frugal MRI scanner is being developed by a multidisciplinary intercontinental team, including Uganda? Imagine what the continent could produce and trade in, given all the technology we have, and now with the economies of scale of the AFCFTA. Trade, though, especially in a globalized world, is complex. As Kenya's Deputy Minister of Trade said yesterday, countries that are at war don't trade with each other, but that doesn't mean trust is automatic. So where does technology come in? In October, the G7 published a set of digital trade principles, and I'll touch on some of these as they relate to this morning's agenda. First, digital trading systems. Governments and industry must collectively drive forward the digitization of trade-related documentation. Imagine not just having PDFs on email, that's so 20th century, but digital documents that you know are authentic and original, and you know who has originated them. Trading counterparties, transacting banks, and all the other stakeholders in the supply chain will be able to validate the data they need securely, even if they're on different platforms. We'll explore some of these solutions in the first two panels. Note that this does mean changing the mindset of banks, ports, customs, freight forwarders, express logistics, and importers and exporters. Legislation in Africa will also need updating, and we'll be discussing the UN model law later. Where governments use digital for processing imports, exports, and goods in transit, these systems should facilitate the flow of goods along the entire supply chain. Single windows should streamline stakeholder interactions with border agencies, not make them more cumbersome. And I can't emphasize enough how important it is to design these systems across all stakeholders. From an AFCFTA perspective, I think removing a lot of these, or in fact, enabling a lot of these technologies will actually remove a lot of barriers, non-tariff barriers, and I think will be far more impactful in the success of the AFCFTA. Third, next, we need data to be able to flow freely across borders with the trust of individuals and businesses. We need to take into account privacy, the protection of intellectual property rights and security, but we must go back to the problem we're trying to solve, which is allowing competitive products to reach customers in the shortest possible time and at the lowest cost through formal channels, not some sort of shadow organization. Open government data will be important, and by that it means public sector data, wherever possible, published in anonymized, open, interoperable, and accessible forms. But that means having the data in the first place, as Professor Bitanga Ndemo will no doubt remind us. After the first two panels, the International Chamber of Commerce will shed light on the Digital Standards Initiative and how that is contributing to making sure we don't end up with data and documents that can't talk to each other, and that we're making the most of technology so that trade is efficient and governance is strong. Then we will have three parallel breakouts on technology enabling intra-Africa trade. The acceleration of digital in trade since the start of the pandemic has allowed, indeed required, organizations to redesign supply chains, What has the impact been on the continent? The first breakout is about trade in food, from farm to fork. For example, how technology can reduce post-harvest loss and enable traceability, and make sure that I can be knowingly served Spring Valley coffee in the lawyer's office I was referring to. We will explore how we can make African produce and cuisines more predictable, accessible, safe, affordable, and exciting across the continent. Breakout 2 is about healthcare. We will discuss increasing the availability and affordability of genuine pharmaceuticals, vaccines, medical devices and diagnostics, and biotechnology, as well as health and wellness advisory, telemedicine, and other services across Africa through trade and technology. Africa needs to encourage high quality, trustworthy, affordable, data-driven healthcare models and export them to the rest of the continent. Of course, we will explore who has and who should have access to healthcare data and give examples of frugal innovation. The continent now has an Africa Medicines Agency, and I, for one, am very curious to hear how that is going to streamline processes and just enable acceleration and of access to medicine and other health products. Third, we'll look at outsourced services, such as recruitment and accounting, and even tourism. With a boom in remote working due to the pandemic, how can we rethink how organizations manage their people and finances through technology and cross-border trade? If you read Craig Atkinson's piece about the prospect of a digital AFCFTA, and I do recommend you read it, we'll send out the link afterwards, we should be able to integrate computer executable rules to automate cross-border transactions into national customs systems. These machine-readable versions of laws should be openly accessible. With the rules coded in this way, individuals without trade or legal training will more easily benefit from the FCFTA, and we all know what implications that will lead to. And that, we could integrate those rules not just into sort of custom systems, but all sorts of other systems, certificates of origin, and so on. At the end of the day, Africa does need to take its ambitions a few notches higher to democratize trade. And for that, we will have Professor Bitenge Ndemo making closing remarks at 1 o'clock. But first of all, let me introduce our keynote speaker. Ziyang Fang is the head of digital trade at the World Economic Forum, where he focuses on how the digital ecosystem, a word you'll hear often this morning, and technologies such as 3D printing, blockchain, artificial intelligence are changing international trade. He's an attorney and technologist and has worked in public and private sector, including Airbnb, the US government, Shearman Sterling, and the IMF. Ziyang has published and spoken extensively on technology and international trade, which is why I'm particularly delighted to have him here. He's even spoken to my own government, the UK Parliament. And he does run a course on tech policy at the University of California, Berkeley. And maybe through MOOCs and through digital, Ziyang, we can have that being broadcast onto the continent of Africa. Lastly, Ziyang is joining us from San Francisco, so I'm particularly grateful, and I am sending the finest AA coffee his way. Ziyang, the floor is yours.
Thank you so much, Ms. Shah. Can you hear me fine? Great. Let me share my screen. Great. Can you see the slides?
Yep.
Okay, perfect. Well, first, thank you so much for having me. It's a real pleasure. I do wish that maybe next year or I can make to Nairobi for this conference. So it's a pleasure to be here. So I've been asked to speak on digital trade. I understand today the session is on digital trade. But before we go into the opportunities and challenges in digital trade in the continent of Africa, I'd like to pose a question of what is digital trade? It's not a rhetorical question. I do ask folks to spend a couple of seconds you think, what does digital trade mean for you? All right, and in those couple seconds, I would guess that you all came out with this different answers what digital trade is. The thing is that there's no clear definition on digital trade. Of course, there are organizations such as OECD, which we work closely with. They have a definition for digital trade and it's widely adopted, right? Which is basically means that trading of digital goods and services or physical goods and services that are digitally enabled, right? What's that mean? Let me give some examples. Digital trade could be a digital book, right? An e-book, that's digital goods, or streaming of television and movies, that's digital services. At the same time, if you purchase a physical book, say on Jumai, and it is delivered but physically, but you purchased online, that's also considered part of digital trade. Same when you book, say, I'm in San Francisco, if I book Airbnb in Kenya and stay there, that's also considered as digital trade. So as you can see, it's quite broad definition. And I would take one step further, and a lot of things that Ms. Shah was talking about is the digitizing trade. I would put that under the bucket of digital trade as well, and it's actually a project that we did at the forum called Trade Tech. Just like FinTech or RegTech, we call it Trade Tech. By the way, it's a hashtag. Feel free to use, and let's get it trending. So Trade Tech is a set of new technologies, anywhere from 3D printing to blockchain that would enable trade to make trade more efficient and exclusive. So my point here at the start, right? What is digital trade? I like to make the argument that digital trade is the future of trade. It's more than just a subset of trade as e-commerce or whatnot. It's really digital trade is embedding every aspect of trade in today's world. Think about a part of trade without the digital technologies or a digital platform. It's really hard to find one right now. For example, if we're talking about trade financing, right? There are lots of digital technologies out there for it. If you're talking about investment, there's we're now talking about DFDI, digital FDI. Right, we're talking about trade facilitation. Obviously, a lot of digital technologies are employed in that as well. So just like a couple of years ago, even now we talk about the idea of digital economy. But if you really think about it, even nowadays, the idea of digital economy and economy, the concepts are merging. Which aspect of economy doesn't have a digital aspect, right? I mean, I just heard someone saying that recently, what is a car but a giant computer on 4 wheels. So same thing for trade, right? Which part of the trade that doesn't have a digital component, right? Hard to find, right? And especially as we enter the 4th Industrial Revolution, where we see the fusion of physical and digital and biological, we will see more and more pervasiveness of digital technologies in every aspect of trade. So I just want to set the scene here to kind of broaden everyone's mind that digital trade is not just like a subset, right, or narrow defined aspect of trade. It's really, however you define it, you don't have to use my definition or anyone's definition, but the reality is that digital trade really is in every aspect of trade. And it will be becoming more and more so in the future. So that's helpful to kind of set the scene, right, of how we think about digital trade now, and definitely digital trade in the future. Digital trade during the COVID pandemic, absolutely being a boost for digital trade, while there are many, for example, social distancing or physical limitations, rules. Digital trade, both goods and services, have kept the international trade flowing. According to UNTAD study, global e-commerce sales went up almost by 20% last year. next statistic I found really interesting is that 1 in 3 consumers used digital payments for the first time. I think that's very, very exciting. And I read that in Africa, on the continent, Jumai, the e-commerce platform, their sales increased by 50% in the first 6 months after the pandemic. So it's absolutely being a huge, huge boost. But I think what's even more important is this culture shift, right? This mindset of digital first. The perfect example is this, right? We are conducting this conference online with speakers from all over the world. If this was 2019, right, pre-pandemic, chances are, right, not every conference, but most conferences would ask the speaker to be there in person. Right? If you cannot be there in person, they say, well, maybe next time. However, that is not normal anymore. That actually is the opposite, right? It's just expected. You probably will be remote, and if we show up in person, that's even better, right? That's what I mean. This culture shift is not just obviously the teleconferencing and speaking, but more so. For example, Michelle, we're talking about the papers, right? The amount of papers in global trade. That's a known problem for years, for decades, right? However, the culture shift of how we need the papers for X, Y, and Z reasons, then the pandemic hits. Right? And those arguments don't seem very strong anymore. So I think that's I see the most important legacy during this past 2 years, is this mindset and culture shift, this openness to the adoption of digital technologies. And of course, they led to a lot of opportunities, but also challenges, which we can discuss more. Of course, because digital trade is such a broad definition, there are so many aspects and topics and issues of digital trade. Michelle was already mentioning data flows, cross-border data flows, extremely important topic. The G7 principles also laid out, consumer protection, open markets, etc., etc. So since I won't have, it's not a lecture, I'll have the all day, so I'll just pick. So for those issues, I think Michelle already quickly mentioned them, but I will focus on a couple of things, especially focus on opportunities, the new emergent issues. I think not many people in the digital trade space are talking about. So a couple of things, all right? So I'll talk about trade tech, which is emerging technologies for trade, digital payments. Then I'll talk about this new wave of digital trade and digital economy agreements. So trade tech, what is trade tech? I call it trade tech is a set of technologies to enable trade, to enable trade to become more efficient and inclusive and equitable. So when we talk about digitizing trade, a lot of times we just automatically think, oh, all those new technologies, right? 5G, AI, blockchain, IoT, whatnot, can just come in and replace all the papers and boom, we're all set, right? It's true, I know that's a goal, but there are steps. And you can see what I say, there are 2 layers. The first layer of digitizing trade is literally the digitizing the paper, right, from the analog to digital, right, turning paper into data, into databases. That's really the first step, because without it, the new technology won't be much use, right? Once you have the data, then you can. That's the first layer. Now the second layer is that then you can apply the new technologies, right? Whether it's blockchain or AI or etc. So that's very important to keep in mind. There are 2 layers when it comes to trade tech, and both layers are equally important. So this is a report we published last year on trade tech. We did a survey of hundreds of companies that engage in international trade. What is the most transformative trade tech in digital trade? As you can see, IoT was ranked #1. By digital payments and e-commerce and cloud and 5G and etc. So we thought that was a really interesting observation. To me, it shows that some of the, the core technologies or, IoT or type of technologies, like digital payments or e-commerce, right? Somewhat basic, quote unquote basic or ones are still very important for global trade, whereas some of the more, I'll say, the emerging ones, 3D printing, VR, AR, in their views are ranked a bit lower in terms of transformative for trade. Maybe now, but maybe not now, but maybe for the future. This graph shows that the impact, right? Not just the most transformative, but the most impact and years to full potential. What it shows that, again, e-commerce, digital payments, cloud computing, the impact is big and is now. Where some of the other technologies, 3D printing, for example, it's a little smaller and it's a bit more in the future. We actually did another study on 3D printing, and OECD also recently published a paper on that, which backs this up. 3D printing is transformative, but it's still a small part of manufacturing, which is the impact on trade will be relatively limited. So that's just an example of transformative tech. I also will try to run through some of the slides really quickly. The impacts of trade tech. Number one, the biggest impact people found was lower trade cost and higher speed. So this is what people expected. Next, would create new products or services. I found that this one quite interesting. Basically, because of the new technologies, they may create new services that you never thought of, right? I think that's something for if you're a business entity, audience, that's something to keep an eye for. Of course, it may have positive environmental outcomes as well. Of course, not everything is rosy. Positioning of bigger companies, monopoly power is definitely a concern that folks have expressed. Some trends in trade tech. Again, I won't go through all of them. Definitely, technology can help supply chain resilience. Data sharing initiative. I know ICC will be talking about that later. Greener trade. I think sustainability. We just had the COP meeting. I think sustainability is super critical for all of us, and trade tech can definitely play a role in this. I'll skip some of the case studies. Challenges, right? Not everything is perfect. So challenges for trade tech adoption. So basically, what are the barriers? Cost is number one, right? Over 40% of companies stated that cost is a major issue, and not just the smaller companies, but bigger companies too. You would think bigger companies have more resources, which they do, but at the same time, because they have more resources, well, it costs more to revamp the entire system. So in some cases, smaller companies may be more nimble and agile. Number two, lack of human capital skills. That is right after number one, so very close. I think that is a critical issue we see at a lot of places. Digital literacy, right? You may have the best technology, but can your line worker use it? Right, that's the thing, right? Do you have to retrain them? What does it take to retrain them, etc.? So that is a major issue. Some of the other ones, access and regulatory restrictions is another one. It's a major concern, especially in this day and age where there are still not very few rules out there globally and also on a regional level for digital trade. The fragmented policies, for example, on data, is a major issue and barrier for folks engaging and adopting trade tech. So next, I'd like to go through the digital payments, which is another huge opportunity. This is a joint report actually done by the Forum and the Cambridge University on fintech companies. As you can see, this is last year. The most are in blue. Blue means good. Retention of existing customer and users, 29%. So a lot of positive trends last year. So in short, more adoption and more uses of digital payments. This is the of all the fintech vehicles, you can see that some of the biggest growth, digital payments, wealth tech, digital assets exchange, 33%, which also makes sense given the craze in the past year. So that was global, right? The past two slides. Now let's zoom in Africa, particularly sub-Saharan Africa. Again, trends are mostly positive. The reds are more in the digital lending, but in digital payments and insurtech, the numbers are quite encouraging. You know, the retention of new customers, as you can see, it's quite high. So those are some positive impacts. Regulatory responses. I think this is what they say what they need help with, right? And you can see the largest request from innovators is faster authorization and licensing for new activities, which makes perfect sense that a lot of new activities are still being regulated under the old traditional banking law, right? Whereas fintech doesn't quite fit the circle, doesn't quite fit that square. So that's being a need. Regulatory support for eKYC, like basically creating a regulatory environment to allow eKYC and how would that work with other countries. So that's another barrier. Government intervention, what do they need from government most? Access to liquidity, you know, tax relief, etc. So it just shows you that obviously a lot of opportunities, a lot of blue in the first couple of slides, but also there's some challenges that folks need to deal with. So I talk about opportunities. We talk about digital trade. We talk about trade tech, digital payments. Then I'll touch on digital trade agreements. Then I'll close. Of course, FCFTA is being negotiated. The e-commerce protocol, I understand, is being negotiated currently and supposed to be completed by the end of the year. So very much looking forward to that. But I would actually point out a recent trend we've been observing is that in the past, I would say 2-3 years, starting with the Digital Economy Partnership Agreement among Singapore, New Zealand, and Chile, there's been a wave of digital trade or digital economy agreements, right? Usually, you know, within a region or bilateral or among a couple parties that really focus on digital trade and digital trade issues, right? My comparison is that instead of being a chapter in a longer agreement, right? Now digital trade is now the start. Instead of supporting access, you know, digital trade is now the start of the show. DeFi started that trend. And of course, Singapore and Australia signed a digital economy agreement, and there are more agreements that are being negotiated. There are talks about a Pan-ASEAN digital trade digital economy agreement. UK is currently negotiating several agreements, including one with Singapore. US, there are talks you know, support our cause for digital trade agreements between US and the Indo-Pacific, right? So there's just really, we see this trend happening, and I firmly believe we'll see more and more of those digital trade, digital economy agreements that focus really address the issues of digital trade in the next, in the years to come. What we're missing is that we don't see any from the region, from Africa yet. So I really do hope that, you know, with the innovative economies in the region, why not? And I do hope to see more of the digital trading economy agreements from the region to really help boost the region to leapfrog, right? To not just catch up and lead the digital economy. And let me just moving to closing. As I mentioned, digital trade is the future of trade, right? Don't think of it as just one small subset of trade, but every aspect of trade has a digital component of it. And when you do so, think about beyond just trade, right? Think about, you know, the digital payment issues, why and what's the impact of that on trade. The top now talks about central bank digital currency. Think about how that, what does that mean for trade? If you're a policymaker, what are the things you should think about? If you're a business person, what are some opportunities you can tap into, right? And lastly, you know, we talk about technology, talk about digital, talk about this and that. But at the end of the day, always remember what's the purpose of trade, right? Trade is for people, it's to improve people's lives. Keep that in mind, and of course, you know, and that's why digital trade is such a component and can enable for all of us for a more inclusive and equitable future in trade. So thank you very much for having me.
All right, thank you, Mr. Yang Fan. That was a really great keynote speech. I really loved the fact that you said that digital trade is more than e-commerce, and we really need to be thinking about trade tech. And really, you gave us a challenge in Africa, because of course, this is the Africa Trade Conference. You gave us a challenge telling us that we need to start thinking about digital trade agreements, especially when we're talking about AFCFTA, and as we negotiate with the rest of the world in different regions, how can we do that? Because we see that happening in Asia and around the world, and we in Africa are really being transformed. Digital trade is what I keep saying, a great equalizer. So we need to actually be very intentional when we are negotiating these trade agreements. So thank you very much for taking your time. I know you're in the States, so time difference. I'm in Nairobi, as you can see in the background. So for us, it's early morning, and I believe the audience was able to get a lot of information from you. And again, like I said, thank you very much for taking the time. And I believe there were very many insights. I know I learned a lot, and I'll be challenging the business community and public sector in regard to some of the things we need to do to improve digital trade and really think about it as trade tech. Thank you very much for your time.
Thank you for having me.
All right, so we want to now go on to the new panel discussions. We have a full day today, really talking about digital trade. I like the fact that Mr. Fan was able to build a foundation about what we will be discussing. But before we do that, I would like to talk to everybody on the audience in the platform, the event 10X, that we actually got from the International Trade Center. What we are saying is that we're going into the panel discussions, and I know a lot of you will have questions as the panel is discussing. So when you are on the platform, on the right-hand side, you will see a video wall. You're more than welcome to put any questions that you may have for the panelists, so that then when they are ready to do the Q&A session, we will be able to ask them the questions. And so with that, I want to welcome my partner for the digital trade session, Ms. Aarti Shah, to go ahead and now take us through the panel discussion and welcome her guests. Thank you, Aarti.
Thank you. Thanks. So if I could ask my guests to unmute and show their videos, that'd be fantastic. So now we are going to start talking really about technology, making trade more affordable, accessible, and timely by moving from serial to parallel. And Carl, I'm not sure if you have trademarked this phrase, but it's yours. Huh? I've taken it from you. Since we're in Kenya, I'm going to start with a very sort of Kikuyu proverb, but I'm not going to pronounce it in Kikuyu. My Kikuyu is awful. But the one who milks the cow is not the same person as the one who removes ticks from it. And that is really sort of an indication of how complex trade is and how many people there are that have a stake in that particular cow, you know, during its life cycle and even afterwards. But trade really enables some more collaboration. And I think, you know, if you know the people and the entities you're doing business with, you're more likely to trust them. And a proxy for knowing them is through data. If data is transparent in real or at least in near time, this will help. But you'll also need a functioning legal framework. And that's where the model law for electronic transferable records, or Mletr, comes in. We're starting to see a digital ecosystem forming around trade. But how holistic and interoperable is that B2B ecosystem? Can I have an Expedia for business, where I select my goods, choose the route, understand customs requirements, make my payment, and track my goods door to door? What about interoperability of digital islands? How is technology allowing the right people to see the right information at the right time? I'm going to sort of take a back seat now, and I'm going to invite my panelists to introduce themselves, and then I'm delighted after that to invite Mr. David Hasanat from Dhaka, Bangladesh, to talk about his organization. So Carl, let's start with you.
Oh, great. Thank you very much. And thank you for the invitation. My name is Carl Wegner. I'm the CEO of Contour. My digital journey has been about 40 years in Asia, 25 years in banking and 15 years in tech. And the company I'm at now, Contour, is a digital trade platform, which allows corporates and banks to interact seamlessly to manage LCs and other trade products. So digitalizing that paper that used to be shipped around the world and facilitating that kind of, as you said, that connectivity and the trust factor by having live data and watching it and being able to coordinate. So thanks for the invitation.
Yeah, and welcome virtually to Nairobi. Sam from Singapore. Actually, Carl, I'm not sure where you are, but
I'm in London at the moment, but yeah,
okay.
Singapore.
Okay, great. Sorry, Sam, over to you.
Hi, Aarti and everyone else. Hello from Singapore. Hopefully you can hear me loud and clear. I was having some technical difficulties earlier. Samuel Mathew from Standard Chartered Bank. I run the traditional trade and FI trade business and also involved very heavily in the digitization of the same, working obviously closely with ICC in my second hat as the Vice Chair of the Banking Commission, one of the Vice Chairs of the Banking Commission, and working with a lot of fintechs out there. And Carl is my partner in crime, obviously, on one of them. But happy to be here and thanks for having us. Would have been great to be in Nairobi physically. I think it's been about 10 years plus since I've been there, but glad to be here today.
Excellent, thank you. And Daniel.
Thank you, Aarti, and thank you to everybody for the opportunity to be speaking with you from New York. So it's late or early, depending on your perspective, but it's great to be speaking to you all about this. And I guess it's appropriate, right? The messages that we're talking about here are timeless. We have had hundreds of years of supply chains, with particularly the last few decades, getting very efficient on the operational side. So efficient, in fact, that the movement of goods between end to end actually costs less than managing the information about that transaction. And that's what we're looking to solve for, right? Basically the container for information, interoperable, standardized, easy to be predicted and easy to make decisions with. I work for the TradeLens platform. It is a collaboration between Maersk and IBM and involves hundreds of different participants across the ecosystem to do exactly that, to digitize the information and documents necessary to support trade. We're actually, coincidentally, working with Contour and with Standard Chartered Bank, trying to achieve this and bringing together the operational and financial parts of transactions together. And we'll have time to talk about that more, so I won't steal anyone's thunder. But thank you very much for the opportunity to be here.
Super, thank you. We're going to be sending you Kenyan coffee just to keep you awake for the rest of the session.
I would appreciate that for sure.
And Carl, for your breakfast too. Okay, lovely. I'm thrilled now to invite, and if I may call you David Pai, to the floor. And the reason I'm so happy is because across Africa, we have a lot of conglomerates that will really be looking at you and in terms of your growth, in terms of your digital transformation, and perhaps even as a partner to do business with. So I would like to welcome you and ask you to talk about your organization and your digital journey across textiles, apparel, logistics, energy, engineering, tea, and education. David, the floor is yours.
Thank you. Thank you. Thank you very much. And good morning and good afternoon, wherever you are. I'm in Dhaka, so it is absolutely mid-noon. Friday is a weekend, and it's a pray day, as a matter of fact. And I'm really delighted to join these sessions. I'm chairman and CEO of the Theoletica Group. Theoletica Group, of course, we are a textile-focused company, but again, our portfolio is quite interesting. That is power, energy, logistics, agricultures, and the educations. Textile is full supply chain we have in our business process, like the spinning mill, fabric, producing the yarn, then the fabric, garment. It's not only the garmenting. the accessories of the garments like button, polybag, everything we produce. It is very interesting. It is a one-stop service, and we say our customer that we are the solution provider. We are not the textile manufacturer, rather than we are the solution provider. You can just bring this your problem. We can give the solutions, because from the design to final product, we provide all the services. Apart from the textile garments, also we have the business. We have a couple of power projects supplied to national grid. As you know, developing country like Bangladesh, we have huge power requirements. So we have a couple of power projects we supply to national grid. And also we have the agriculture business, tea garden, very interestingly, like Kenya produce the tea. We also produce the tea. We export the tea. And some warehousing logistic business also we have here. Transportation, like different kind of logistic business we're engaged. And also educations. We have very interestingly, we have the IB school in Bangladesh, the first IB boarding school in Bangladesh. So anyway, we started the business. I started the business 1996, 97. And of course, now almost a $500 million company, turnover company, manufacturing company, and more than 14,000 people working in our whole group. Very interesting, the digital journey. Being a textile, we always known as a polluting company, polluting manufacturer. Of course, we have that things in our, let's say, when people describe a company, textile company, but at the same time, our company is quite a tech-savvy company. People say we're a tech-savvy company. We implement the SAP ERP in our entire supply chain. That is 2008. Textile company and based in Bangladesh, it is really a big step. So not only the SAP ERP for the our systems, also some homegrown as well as some outside. Software. These are RPA, process automations. So these are uniqueness of our business, and I believe that's the thing give us a competitive advantage. I'm sure our profile in the digitalization or our digital ecosystems help us to always advance from our compete. And not only the SAP ERP, I'm sure if you look at our news last week, where the company in Bangladesh first implement the digital payment method that for workers, more than 10,000 workers. 2015, we implement the mobile work payment, their wages or their salary payment to the mobile wallet, the bKash. I'm sure you already, with investment division, probably know yesterday, the SoftBank has acquired 20% stake of that bKash. And of course, Alipay has taken 20% before earlier. So quite renowned company. So we engage with bKash 2015 to make our workers payment through mobile wallet. So this kind of digital process, we always integrate in our business process. We believe without digitalizations in our business process, operation process, we cannot keep our momentum ahead of the competition. So this is a very brief of our company, and of course, I'm ready to answer any further question. Thank you.
Thank you so much. I think I just have one question. Over the last sort of 20 months, we are still in the middle of the pandemic, but a lot of organizations have had to redesign their supply chains and look at new forms of technology. Is there one thing that's changed for your business from a technology perspective because of the pandemic?
Very interesting. Like the pandemic actually immediately introduced to our customers and some of even the supplier that how digitally advanced we are, because not only the digital design, digital payment, a lot of cases, let's say in Bangladesh, government give some fund for the workers, and government say this fund has to go through the digital payment method. Yeah. So we implemented these things 2015. So like our customer, they say, I mean, physical sampling is difficult. So we need the digital samples. Can you implement this software or that software?
Yeah.
Interesting. Last 3-4 years, we already implement these kind of things. So this pandemic, probably we can get the real benefit of our digital journey, or our digital ecosystem help us to take the advantage of the pandemic. Instead of the struggle, we just took the advantage of the digital ecosystem.
That's superb. And I think this is not going to be the last pandemic. So I think for businesses out there, please take a leaf, an electronic leaf out of David Pai's book and see how you can really be thinking about this. So thank you very much. I'm going to move on to Carl now. I'd love to hear the story of Contour. I know you're famous for saying you discovered the internet, or when you discovered the internet, that was sort of a tipping point for your own career. But I'd really like to hear also what you think a solution like Contour can bring to Africa, especially given how commodities rich the continent is.
Yes, thank you. Yeah, so I often say my digital journey started. This is my third startup, and I left banking once in 2000 for this new technology called the internet. It seems to have stuck, and that was for a supply chain, also a trade finance based platform. And then I left banking once again in 2016 for this new technology called blockchain, or distributed ledger. And both times it's obviously it seems to have stuck. But I think the point being, I've always tried in my career to try to match the knowledge I had in trade finance with these new technologies. And I think really with if we look at trade finance, we look at digitalization of trade finance, and Daniel mentioned it as well. The goods are moving faster than the information, which is just amazing, considering that we can post on social media, be ubiquitous everywhere, friends all around the world, but yet a container of goods can move from maybe a 3-day journey or a 2-day journey in between Indonesia and Singapore, or maybe it's a day journey, but the documents take a week or 10 days. So especially with commodities, they're very often it's high dollar amounts, and therefore it needs a little bit more documentation, and that documentation has to go along with the it has to get there at the same time as the goods are coming. So we see, right now Contour is available in 51 countries, including many countries in Africa due to our support from Standard Chartered Bank. And there's tremendous opportunity for commodities to be imported and exported using digital forms, which will make them more competitive. We see quite a few industries looking at this, and they're in the commodities side, it's iron ore, it's steel, it's metals, it's chemicals, it's petrochemicals, all looking at this. We also have customers in traditional industries like Villatex and in textiles and retail. But commodities, especially for letters of credit, are a key key use case, and hopefully to see the ability to digitize and connect with partners, right, with TradeLens and the banks, because I think the key thing is going to be these networks to work together. No one can do it all. Trade is a lot more complicated than Expedia, to use your example before. There's specialties in shipping, in booking, in tracking, and the finance, and each one is their own ecosystem, and they have to figure out how to connect.
Yeah, sure. No, I fully appreciate just how complex it is. I think it's a question from the customer or the client perspective. How do they start seeing all of these things starting to look more seamless? I just have a question regarding I guess KYC, and I'm sure we'll be talking about it more during the discussion. We've seen trade finance activities by some of the larger multinational banks decrease in Africa, and that's often because of their own internal bank controls around risk and compliance. How do you see, a platform like yours, given that so much data is now available, right, to many different people at the same time. Do you think that a technology like yours could reverse that trend, or at least, help with that issue?
Absolutely, absolutely. I mean, having more digital data allows banks to make better decisions, make more in-time decisions, live time decisions. And not only is it going to, I think, make it easier for banks to lend, to bring up the lending amount to also, a more inclusive group of customers, not just the big multinationals, but smaller customers. But as the earlier speaker said, there's a possibility of implementing new products. If you have data that you can verify, you have the history of a customer, you have the you have the history of customer, you know how they've done with this trading partner in the past. So you have some background there. You can see live streams of where the goods are, where it is in production. There's all sorts of potential for dynamic risk financing, more inclusive financing. They call it deep tier financing, whatever it is. And I know the banks, and probably Sam can talk about it, what the banks are looking at to leverage this data. But the first thing, it's got to be digital.
Mm-hmm.
You got to digitize it and get it in, then you can start using it.
Sure, perfect. Yes, and I think that's really what we're talking about, a sort of single digital backbone. And whether it's Expedia or something else, I mean, the point is, let's just start streamlining some of these 300-year-old processes. So Sam, how is Standard Chartered, the bank that is here for good, making trade finance cheaper, faster, and more accessible? And your Contour's partner in Africa, I don't know how many people here know that, but yes, what profile of client would be able to use a solution like Contour through Standard Chartered?
Thanks, Aarti. So where do I start? What are we doing to make trade cheaper, faster, better? I think there's a host of things. But before I step into that, let me probably put a little bit of context, right? I think there's been enough said, but when you look at the world of trade finance, there are broadly two buckets, and I guess most of us know this, right? There's the open account or supply chain finance, a portion, and then there's the documentary and traditional trade. And the reason the two exist in that way has a fundamental connection to risk. So if a buyer and supplier are very comfortable with each other, you don't really need the bank to play an intermediary role. Mm-hmm. You may go to the bank to finance the flow subsequently after you've dealt with your buyer, with the invoice, but you don't need the bank to play that trusted intermediary role. Whereas in documentary trade, the reason it exists today, and the reason it is a big part of most banks' flows, because that's where the bank actually plays an intermediary role. And the reason it does that is because the buyer and the seller don't trust each other. Mm-hmm. And that's especially so when it comes to commodities. You're dealing in 1 million barrels of oil, then at today's prices it is $80-90 million, and you need a bank to verify that the supplier is supplying what he said he's going to be supplying, and the buyer will actually pay, and the supplier doesn't want to take that buy risk. So supplier performance, risk mitigation, financing, settlement, and acting as a real intermediary, and that's where the second bucket becomes important. So my personal view, first of all, is that the open account supply chain finance will be much faster and is becoming digitized much faster, because the nature of the beast is different, right? Because all you need is a purchase order invoice data, and if you can validate that data, you should be able to finance that flow. Whereas in the second bucket, you have a host of parties. It is very complex, as Carl alluded to. You need to tie into logistics companies, chamber of commerce, certification companies, bill of lading, and titles, because you need to know that you really are carrying the title or validating the title on behalf of your clients as a bank before you certify that the payment can be done. So given that context, what are we doing? We are definitely doing a lot in that first bucket, and it's moving very quickly. So you may have, I can talk about the public things. We have a partnership with SAP Ariba. We announced a partnership 2 years ago with Link Logis, which is a deep tier supply chain company. And there's lots happening in this space where we are plugging into and hoping to become the financing button on a marketplace where open account supply chain trade is being done, right? Very much like the way you buy insurance, when you're going to booking.com and booking a trip. The insurance is not provided by the airline, it is provided by an insurance company. Similarly, Standard Chartered Bank is hoping and aiming to become the finance button that a buyer or a supplier clicks on a platform like Contour or a marketplace where there's underlying commercial flow that does the financing, brings the financing to Standard Chartered. The second bucket is a little more tricky. And what are we doing there? We obviously are part of Contour, where we are trying to change the mindset and change the way letters of credit are done. But it's not really the LC that is a problem. The problem is all the participants have to be on the same ecosystem or the same business network. And one of the challenges is there are many of those today, and many of them are only looking at a small part of it, right? Either just the shipping piece of it, or just the Chamber of Commerce piece of it, or just the LC issuance piece of it. So the way we are looking at it is, firstly, can we completely digitize the way a client, so if Aarti Shah is a client of the bank, can we first of all make sure that you don't have to come to the bank to issue an LC or issue a guarantee or ask for the status of your transaction? Because that was history, right? So first of all, can we digitize that completely through our own channels, through apps, through API interfaces with platforms that you may be dealing with? That's the first leg. Second is in terms of between us and another bank, today it is Swift, a lot of documents flow as paper. Can we digitize that part of it? That's where our investment in Contour and partnership with something like Contour comes in, and the various electronic BL solutions we deal with, TradeLens, SDocs, Bolero. There are a few, and then the last mile is obviously settling, which is payments. But I think paper is going to be here for a while. So one of the other things we are doing is looking at AI and artificial intelligence and machine learning based technologies to try and digitize the paper at the first point of contact. So we still get paper at our counters because many countries still need physical paper. So how do we at least extract the data from the paper at the first touch point such that the remaining processing in the bank can happen in a digital manner, and that will translate into better client experience for our customers. So those are broadly the few things. And I think I was listening to the earlier session from Ziyang Fen. There's lots happening in terms of e-commerce. I alluded to that, plugging into those IoTs. How can we do inventory financing based on IoTs? How can we look at AI and data? I alluded to that. So there's lots happening, especially in credit. How do we look at data and transactional credit as opposed to balance sheet lending? Because eventually all of this has to come together. Let me stop there, otherwise I'll go on, Aarti.
Fantastic. Thank you so very, very much. So I'm going to move on to Daniel now. Samuel, I will come back to you.
Sure.
But Daniel, I don't know if you've been to Nairobi, but we have a part of Nairobi called the industrial area. So if you're driving from the airport into town, which is behind me here, you'll be passing the old, the original industrial part. The point I'm making is that one of the millennial, and the word here is millennial, manufacturers along Mombasa Road was telling me he has to chase shipping documents and it's time consuming and there are always errors. From your perspective, how is technology allowing the physical and the financial sides of the supply chain, so goods and paperwork, to converge, and where does TradeLens fit in?
Well, I'm a fellow millennial from your questionnaire, so I'm glad that he and I, or that she and I, can have a mutual position here. But look, if we think about the way that trade information works today, it's a very linear process, right? So the factory will produce the goods, they'll create a document describing what's been produced, and that'll get provided via courier pouch or via delivery service to you in the headquarter office. That will then get put over to a container. It'll be stuffed. You'll get a packing list. Your finance team will put together a commercial invoice. You kind of put it together. You'll validate it. You've got the letter of credit that you raised earlier. You check it against it. They don't match. You're like, oh, well, this is not compliant. We've got to go back. We've got to get the documents checked. It's very much an iterative and manual process. And look, I've sent letters to my dad when I was in college because that was just like a nice thing that we did. But like, All we do now is iMessage, and that's why we had a call just before this as well. But it's very easy in the digital world to get information to people who need it. Trade is slightly unique because it's not just you talking to your dad or metaphorical dad here. If you think of a typical container end-to-end journey, it involves 30 different organizations, 100 people, and 200 information exchanges. And if we take that as a linear approach, as soon as one thing goes wrong, the other 199 information exchanges that go on get delayed. Those delays cascade. And if anything at step 10 is wrong, you need to go back to step 1 and start again. So what TradeLens is doing is saying those 30 organizations that have something to do with that transaction can be brought on to a single shared platform so that information can be uploaded, stored, and shared with permission parties, to use your phrase, which I've also used many times, to ensure only the right people see the right data at the right time. So for instance, if I have a few different people within my organization or within my sphere of influence who create documents, who have visibility that they want to share with me, etc., with a UI or with an API, that information can be uploaded to our blockchain-based platform and can be accessed by the parties that you want to have access to it. Then let's say it's a trade financing transaction through Contour directly with a bank. You need to make a presentation. That document pouch that today has been physical can be digitized because the documents were already digitized. Documents is a construct, right? Really what it is information. A letter of credit is really just like, hey, give me these lines of information and then I'll give you your money. I'm oversimplifying it, but we all know that that's really what it is. And what that allows us to do is say, well, if it's actually just information, we can get that up to this platform, we can present it to the bank, and we can go from there. And that's what we're doing with the TradeLens platform today. It's not just about the document presentation, it's about communicating with customs. We've recently announced a series of pilots with Dubai and Abu Dhabi customs to digitize their trade processes. So you can communicate with customs. You can communicate with your buyers, with your consignees, to ensure that they can get information ahead of time. Look, we have customs processes that take days, weeks to get done. What if we could get the information in the hands of the consignee even before we've loaded the box on the ship, and they can start getting that clearance process underway because they've already got the information that they're going to get anyway, but with a click of a mouse, they can get it now. So I would say that, obviously, first of all, sign up to TradeLens. We're a platform that operates globally. And what that will allow you to do is work with your supply chain partners to bring information to you so you can control it. And just as importantly, get it out to the people who need it, as I say, with a click of a mouse. That's the only way that we're going to be able to successfully digitize trade, is that information is in one place and then it can be shared to other places very easily.
Excellent. Thank you so much. And Carl, I just want to ask you about the digital islands and the digital ecosystem. What's your sort of thinking on that?
I mean, absolutely. This is the 2 points on it. One is that something like Daniel's talking about, all the shipping information and booking and shipping and where the container, that's a whole ecosystem and knowledge base and group of experts. And it's different people in a corporate who manage that than who manage finance. And so even in the organization, there are different groups of people. So the digital islands are going to happen because you have different areas of expertise. And so these products and these networks have been built to follow certain areas. Now, I think the key thing is they communicate. And as Daniel said, and we used to call it 20 years ago, we called data inheritance, right? Key it in once, don't key it in twice, real simple, right? First get it digital, then share the information. And in Contour, we really look at the partner network is a big component of our future success, continuing successes, because we can't do everything. And we're happy to work with partners on a customer basis. So if a customer is in Nexus, if a bank or a corporate says, I use TradeLens, I use Contour. Okay, we should talk, and let's talk. So that's why we're working with TradeLens. We have customers in common, right? Where we're sharing some of the information that's needed for the LC. We can get it from TradeLens. But the second thing is with all these digital islands, the other thing that I want to talk about is that, there's digital islands, but there's also competing systems out there. And there's also sometimes this worry, well, I don't want to start with so-and-so. Well, I'm going to wait for one system that manages all to start. And the way I sort of address that is digitalization is a journey, right? You're not going to digitalize. If you had one system, you're not going to do it all tomorrow. Because you're going to internally, companies and corporates and banks and shippers are going to have to learn how to digitize. And the live example we have now here, we're sitting on Zoom, right? If everyone said, well, I'm not going to start using VC until, I don't want to use Zoom and Teams and Skype and Blue Jeans and, other systems. Wait till they all coordinate, then I'll start talking. Well, no one have talked to each other for the last 20 months, right? So you have to start with one, and it's a learning journey, and we're all getting better at it.
Sure. Great. I absolutely agree. I'm going to shift the conversation now a little bit to the fact that very often technology is ahead of legislation, right? And a very famous example is, I don't want to make it a one-hit wonder, but is M-Pesa, or mobile money in Kenya. People still talk about it today, but one of the reasons why the uptake was so successful is because they didn't start with the regulations. They just went ahead and did it. And then by the time it was so big that the central bank couldn't ignore it, that's when they went and got it sort of properly sort of legislated, regulated, etc. And I think that is really the only way technology can scale up, if the law catches up. So Sam, can you perhaps tell our audience a little bit, just very briefly, about the Mletr and why it's important, and what have the early adopters achieved, and specifically, what do African governments have to think about?
Yeah, Aarti, I think it's a good question. Firstly, I do agree. If you look at, and there are many examples where technology initially creates a market, and then the rules and regulations follow. In the area of trade, firstly, what is MLETR? It is the model law for electronic transfer records, right? So what that states is basically, if you have a digital transfer of a asset or an instrument or a negotiable instrument or a title, then it is as good as having been executed in the real physical world, and it will be upheld in a court of law. Now, that's the model law. Obviously, each jurisdiction needs to adopt it. So Singapore adopted this last year into its Electronic Transactions Act. Bahrain and Abu Dhabi have adopted it. The UK is going through legislation through its parliament, so that should probably happen sometime this year. And I think there are various markets the other markets that are looking at it, and eventually it will come. So what that enables us to do, at least have a level legal playing field when it comes to digital trade. We all talked about exchanging data and titles and making everything easier, but it's all that is no good if you want to then enforce that against a counterparty in a court of law and it does not recognize a digital asset or a digital bill of lading, for example. So that's where we are at. I think it is starting. So like I said, a few markets have already done it. In fact, yesterday we announced in Singapore that we have actually done a pilot between the IMDA, the Infocom Media Development Authority of Singapore, and Sanchar and a couple of other banks working with the Abu Dhabi, 2 MLETR compliance jurisdictions. We actually did a pilot which showed that 2 important things. One is the legal aspect, that we can actually subject it cross-border to the same legal principles. But more importantly for me, the digital islands that you referred to earlier, we actually got a title, a dummy bill of lading, to move from one ecosystem to the other. And that, to me, this is the first time I've seen, I personally have seen that happen. Of course, it was a pilot, not a real transaction. But I think this is the starting, because what we really need to achieve is everybody speaking a common language. There can be multiple competing platforms, that's fine, but you need to have that handshake for title to it. The closest analogy, Aarti, that I think about is, which by the way today is not possible, is if you're using WhatsApp and I'm on Telegram, can we send each other a message that originates from WhatsApp and goes into Telegram? The answer is no. You can't, unless you somebody come with a technology solution to create that bridge, or unless you join Telegram and I join WhatsApp. And that's pretty much the situation in the world of digital trade today. There are various ecosystems that are solving for some parts of the problem, and in many cases, the same parts of the problem. However, to get the information moving between all the parties, you end up joining multiple ecosystems, whether you're a corporate, whether you're a bank, and there is a limitation to that. So sooner rather than later, we need to get the information flowing between parties who are not part of the network. So if I am in Contour, for example, and my buyer is my counterparty bank is somewhere else, tomorrow, as we go into that future, Contour should be able to exchange that information with the other business network. And while doing all of that, we have to make sure it is cheaper, faster for the end corporate buyer and seller. Because if it's going to add cost in each hop, and eventually it is going to be more expensive or equivalent to the paper cost, then it doesn't work. I think, and as Carl said, it's a journey. I think we will have multiple steps, and sometimes it may feel like we're going one step back, but I think eventually we'll get there.
Okay, super, yes. And you read my mind when you talked about the cost, because Africa is already a very expensive place to do business, and we really need to change that if the continent's going to be competitive with itself and, of course, with the rest of the world. I think one last question for you, Sam. How do African corporates benefit from all the new technology that is available? And you as a banker to many of these, what would you advise them?
So first, the one thing I would say to all of them, assuming you are dealing with Standard Chartered or any other bank for that matter, how are you interacting with that bank? That's one bucket. Are you still doing courier runs? Are you still sending paper? Are you still sending faxes to your bank to instruct the bank to open an LC or draw down on a loan? Whatever that instruction is. And how are you getting status back from the bank? Is that also paper? Are you waiting for your bank statements every week or every month? Are you waiting for your LC to be advised physically? So those are the low-hanging fruits. First of all, try and digitize that, and that should be very, very easy to do at actually no cost to you. The bank should be doing that, right? So there should be internet banking, there should be emails, there should be APIs, there should be platforms they can provide to you to integrate, both for the instruction and the information going back. So that's the first part of it. Second, I would say look at your own processes and your counterparties. So if you are buying or selling from Asia or the Middle East, and these counterparties are insisting on opening LCs, consider a platform like Contour, right? Would that make it cheaper, faster, better? And how will that, and in terms of the actual shipment, are those vessels able to, or those carriers able to give you electronic bills of lading? If there's again, the problem I discussed earlier is there are multiple platforms, right? Are those vessels on TradeLens or S-Docs or Bolero or Wave? There are 4 or 5 players out there that are major ones. Eventually, they will need to interoperate, which is the point I was coming to, because there'll be a limit to how many of these platforms the exporter or the importer in Africa will be able to join. So the short answer is look at the low-hanging fruits. Talk to your bank. If it's Standard Chartered Bank, talk to them. Are you using electronic means to send instructions to the bank? Are you using electronic channels of the bank to get information back to you? On the open account side, if you're dealing with open account, which in my view, if with Africa, it should be limited, but that should be very easy to digitize, because it's only purchase order and invoice information on a post-facto basis. If it is larger value transactions that involves letters of credit, then talk to us, talk to your banks, look at solutions like Contour that will help you, and TradeLens, which will help you to hopefully digitize the paper and take it away to the extent possible.
Great, thank you, thanks. And Carl, how does a corporate in Africa talk to their banker about specifically using your platform? I know you already have the likes of a Cargill, for example. But we have many, many, many of those on the continent. So what advice would you like to give them?
Yeah, I think it's obviously we work with the corporates and the banks. There's a come directly to us. Come to Contour, www.contour.network, and talk to us. And the thing is, as Sam alluded to, is it's a group effort. You have to get your banks, you have to get your EBL providers like a TradeLens. You have to. There's different parties to join. To do an LC transaction, you need 4 parties: buyer, seller, buyer's bank, seller's bank. And what we do at Contour is it's our responsibility to bring the new players on. So once we talk to someone, a customer comes on board, we ask them who their counterparties are, who their counterparty banks are, continue to expand the network. And it's a snowball that's getting a little bit bigger, but it's growing quicker. We're adding almost one new corporate every day now into the platform. So it is going quicker, and we're learning how to do it. But I mean, from an Africa point of view, come talk to you and talk to your bank, right? Talk to your banks. I mean, Standard Chartered, they know it. They're there, and I think the bank can also be a great advisor to these different platforms as well, because they're going to be the one who's going to be really managing, the trade, the finance aspect of it.
Sure.
And Contour as a facilitator is passing that information electronically. And Sam said very right. I mean, if you're still sending faxes, then they're part of the problem. But the banks want stuff electronically, right? Whether it's to their own bank specific platforms or global platforms like ours. The banks want the information electronically. They don't want faxes and phone calls. So the more you interact with the bank, the more the bank is going to help you do it more efficiently.
Super. And Daniel, just briefly before I pass back to David Pai, because I'd really like to hear from him as to all these things we've been talking about. How does he feel going forward? But from your perspective, how are you onboarding clients?
So we have 2 products in the market today. The first is the TradeLens core product, which is a supply chain management suite of tools. So it can help improve the actual execution and increase resilience in supply chains. And that's by having more data in your hand, the ability to collaborate with supply chain partners, and to digitize documents. To get involved with that, we have a sales team all around the world, including in Africa, and including in Nairobi, actually. So if anyone needs to reach out, we'd be more than happy to hear from you. You can also check out tradelens.com. The other product is the TradeLens EBL, which I've talked about here. And we get people up and running with 3 steps. Agree to the terms and conditions, create a username and a login, log in and use the solution. It's really as simple as that. You can start digitizing EBLs. I think it's important to note that things like the model law and other discussions around having a common platform or a common set of standards is important, but I am perhaps a little more cynical than most in terms of my expectations on how quickly that can be implemented globally. So what we think may be a simpler way. So the TradeLens EBL, like all EBL solutions, works as a contractual framework. We all agree to use this digital solution as if it were the same as a paper BL. We think it's quicker to get organizations like customs and central banks to permit the use of digital documentation, which can be done through regulation, rather than wait for wholesale legislative change around the world. So I think there is a long-term goal that we all share, but we are doing hundreds of EBLs every week across multiple jurisdictions, and we are including trade financing as part of that number. So it's important that we see this as a journey, and there are steps that we can get to right now, and there are steps that we can take before we get to that final status. So if you're interested in doing EBLs today, that is permitted in most countries around the world. and in terms of trade volume, the vast majority of countries around the world. So we think it's really exciting. And as I say, 3 steps: terms and conditions, username and login, and you're up and running.
Okay. Thank you. Thanks. So David Pai, I'd like to welcome you back to the floor. We've heard a lot over the last sort of 50 minutes or so on sort of technological evolutions. In your view, how could industry, including your own group, collaborate with these different players and collaborate with the financial services, the logistic services, and to some extent government, maybe not on your own, but through your industry associations? How do you think we can get to the next level of digitalization?
Yeah, thank you, Aarti. I think Sam and Daniel already explained the entire business process, as we know very well that the buying something and make the payment is a huge job. The bank documentations, timing, and nowadays everything is fast. Like not only the fast fashions, not only the textile business, all the business become very fast-moving stage. So considering these fast-track scenarios, the payment system, if we can digitize, definitely we can get the benefits. So as I already explained that more than 10,000 our workers getting their payment through a digital mobile wallet. So last 5 years we're using this. So we know the benefit of the digital payment methods. So of course the government, we need to look at the country's legislation part, the legal part. If it's allowed, definitely I believe this digital payment system can help our business, not only the timing, and as you know, time is a money. So that can create a lot of advantage. And when the payment method will be through digital platform, a lot of data, because then you can get the data. Based on the data, you can make decisions. You can check the data analysis. So that's why it's very important if we can evolve payments methods with the digital.
Oh. I think
the government part, the legislation parts. If let's say bank can get the
Okay, I think we seem to be having connectivity issues. So let me just step in. You're back. Do you want? We lost you for a second. Okay, let's see if we only have sort of a few minutes now anyway. I think I'm not even going to attempt to sort of summarize the discussion, because there was so much in there, around, first of all, just making the data available electronically in the first place, and then around that very, very important question of interoperability, which is something I think across Africa, we do need to start thinking about a lot more about things like open banking, for example. And I know in the next session, we'll be talking about that and how, you can't have a single sort of backbone, if you like, of data flowing, all this plumbing in the background that may not be visible to end users, but ultimately that's really what we need, all these pipes through which the data can be flowing, and then of course all the permissioning on top so that only the right people see the right data at the right time. I'm going to say a couple more things. Contour actually does have a virtual booth in the exhibition, so please go and talk to them about any more questions around letters of credit and digitalizing them, and how you can even sort of get familiar perhaps with their platform. Otherwise, I would just really very much like to thank, first of all, David Pai on Prayer Day. Thank you so much for joining us. Thank you, Carl. Thank you, Carl, Samuel, and Daniel across all these various time zones for a very, very rich discussion. And I'm really sort of looking forward to continuing the engagement. I think we need to bring you all over, put you in a room with the central banks, the 38 or so central banks we have across Africa, because we do have some common currencies. We do now have digital currencies in Africa too. We'll put you in a room with the central banks and with major industry associations, and very importantly, all the revenue and customs authorities and the ports authorities. We'll put you in there for 2 days. We'll try and do it perhaps in the middle of Nairobi National Park, just to, to make you feel that, you've come for a reason. And we'll let you out when you've come back with a solution that is going really to move this continent well into the 21st century. So thank you all ever so much for your time, and we'll be in touch. Thank you.
Thank you so much, everyone.
Thank you, much appreciated.
Okay.
Enjoy the conference.
Thank you. Thanks.
Thank you.
Okay.